the emphasis here is on short-term forecasts. It's not going to predict what the market will do 6 months, a year from now, but when you have the short-term forecast, that can help you get into the positions that you could potentially hold for a while. We're going to look at some of the major stock indexes, and we're going to try to figure out a little bit more about what the stock indexes, the charts are saying about the stock indexes, and what potentially could be happening on the charts. Now, you have to keep in mind that in addition to when we're talking here about the stock indexes and the futures contracts, we have some other potential things that we can use for stocks like the sector funds, exchange-traded funds. Of course, you can always trade individual stocks. So there are lots of other things that are related to stocks that Vantage Point does forecast. As well, up here is the E-mini S&P 500. It's the most popular type of contract. We got the 3-year screen that we showed before with those highs and lows, but we're going to cut that down a little bit. We know kind of like the trend and what's happened, but just to get a little bit better picture here of what the market looks like and what it has done in the last year to put some things into perspective. When you are looking at this chart, first of all, what we're going to do is we're going to look at the chart without the advantage of Vantage Point, and that is we're going to look at it. Let's say we're a traditional follower, trend follower, or a trader, and we want to look at some of the things on the chart that maybe will tell us what the market might do in a traditional sense. The first thing to point out, if you start to do some trend lines and put some analysis on here, is that you have a line that goes up. That marks the uptrend off of that July low in this case. Nice uptrend, but then you put this other here on the top side, and if you follow traditional technical analysis at all, you might recognize that as a wedge formation. A wedge formation, typically suggests a breakout of that is going to be a turn. Now, what happened in this particular case is that we did have that turn, but look what happened. We had the big breakout on January 21st and 2nd, and you lost 60 points in a couple of days. It's pretty hard to catch on to a market like that. It's like catching a falling knife, as they say. Then you have the question when you, in addition to trying to find out where you're going to get on board if the market moves like this, is where is support. We'll say that maybe there's support right here, which did seem to hold, and we have other points where we can draw support. We have one here around 1040. Oops, I made that one a little too high. Let's drop that down a little bit. 1040, we got to get it in line with the IRS here with our form 1040. We have a support line that goes across here, somewhere in the vicinity of 1025 now, or is it maybe, right here, more likely at 1020. We can draw another line right here coming across. Is that at 990? In short, when you look at all these potential lines and see all these support possibilities, almost any price on the chart seems to be support. So some of these are not that helpful. It does maybe help you suggest when a turn is coming, and particularly if you use it in connection with some other software, but not necessarily a gauge of exactly what is going to happen on a chart, and not very reliable in terms of getting some precise figures as to where you might want to enter or exit a trade. So we're going to go back to our Vantage Point screen. We're going to take a look now at some things that we're going to add to this screen. And when we add to the screen, we're going to cut our time down. We already know what the bigger trend looks like. We know what the traditional people are looking at when they look at the longer term trend. We'll just slice it back here for the moment to 6 months, and we're going to add a couple of indicators from Vantage Point. The first one we're going to add, we're going to look at the medium-term crossover, which is a predicted moving average versus an actual moving average. If you will notice here, where the blue line, that's a predicted moving average. You have the black line, that is the actual medium-term moving average. When the blue line crosses the black line, that's typically a sell signal. If it's on the downside, when it crosses above the actual, it's a buy sign. I want you to pay particular attention. We're going to talk a little bit more about this particular period. If you can see where my cursor is right there on January like January 21st, 22nd, right in this time period right here. But those couple of candles we're going to concentrate on that, take a look at it more carefully. Now when we look at it, let's do a little switch here and do a traditional way of looking at things. We said before we were looking at the traditional method that we were looking at before. We're just going to do a simple moving average of the close, as we talked about, a medium term, and to show you what that looks like as comparison. If you will note, the purple line in this case is a 5-day, in this typical common moving average to use. The black line is a 10-day, so you have a 5-10-day moving average combination, and that purple line that you see there, it crosses, and if you'll notice, remember where that blue line was before. I'm going to come back to that blue line, but if you'll notice that the purple line lags the predicted moving average crossover by a day, and a day can be fairly significant. And we're going to switch back over here. We're going to add a couple of other things to our screen here. We're going to talk a little bit. We're just going to go with our medium-term crossover for the moment. Talk to you about the the predicted moving average and highlight a couple of items about that. But before we get to highlighting them, I want to make sure I add a couple of other indicators here that Vantage Point has. The first is a proprietary indicator called the Neural Index. The Neural Index is a comparison of 2 3-day moving averages which forecast whether the typical price will be higher or lower in 2 days. So it is a short-term outlook. It has a reading of either 1 or 0. You know, it's either right or it's wrong. It's either going to go up or it's going to go down. There's no in between about that. The second is the predicted differences. That's represented by the blue and the green lines in the bottom panel on the screen. We're going to take a little picture of this, talk about this a little bit further, and to talk about what you get out of this particular type of information when you have these indicators working together on, on one particular chart. In looking at these charts, the first thing that you need to look at is, well, a lot of people look at, I don't know that that necessarily means that's what you might do, but the first thing that people like to look at is they like to say, okay, what's the short-term indicator suggesting to me? If you look at that gray line, that's the predicted neural index. As I said, it's either 1 or it's 0. Currently it's at 1, so that would suggest some bullishness. The predicted differences are sort of a favorite of mine. You can see we have a period of time in here where the whole market tends to look a little mushy right in here, where it's kind of like going sideways and the predicted differences kind of get. But when these predicted differences turn down, you have a pretty good idea that there is some weakness. The predicted differences